What's up, guys? It's Jeff. So what the heck is going on in the stock market? Well, I made this quick video to share my thoughts with you on what's going on in the stock market and what you should be thinking about. And as always, I'm not a financial advisor, and this is not financial advice. This is for entertainment purposes only, and you should do your own research. But basically, the most important thing for you guys to understand right now is that we're in the consolidation phase of a bull market. Now, what does that mean? Well, we just had a massive bear market from the end of February to the end of March, and then a massive bull run from the end of March to really the end of May or early June. Now, what happened was that the market fell way too fast and then climbed back up way too fast. So that's having some consequences now, some really important consequences for you and I to understand. And it's created a bunch of different groups of capital. Let me walk through them right now. So group one is people who made a bunch of money. So that's the hedge funds or retail investors. Some of them are deciding to hold on to their stocks, and some of them are taking profits. So they're creating a bit of selling pressure. Group number two is people who lost a bunch of money that don't want to hear anything about the stock market, at least not right now. This is mostly retail investors, and this creates some cash on the sidelines. Group number three, again, is people who lost money but are waiting on the sidelines for either valuations to come down or to get an all clear sign from the economy. And then group number four, most important of all, is the big money investors like pension plans. And what's going on right now with them is quarter end rebalancing. So just to take a step back, pension plans essentially need to rebalance their portfolio every quarter. So they need to keep a target allocation to stocks and bonds. So just to oversimplify, let's assume their target allocation is to be 50% in stocks and 50% in bonds. So let's look at what happened in March. Stocks went down 30%. Bonds didn't fall down that much. So what ended up happening in a lot of cases, their allocation, instead of being 50% to stocks, might have been 40% or 45%. So what they needed to do was sell down some of their bonds and buy stocks. So that created massive buying pressure in stocks at the end of March. Now we're faced in a situation where since March, equities have gone up by quite a bit, right? The S&P 500 is up 40%. And so that 50% allocation at the end of March might now be 55 or 60% allocation because bonds didn't go up that much, right? And so now they're in a situation at the end of June where they need to sell down their stocks to get back to that 50% allocation. So that's creating a lot of selling pressure. And that's specifically what you're seeing now because it's quarter end and you've got a bunch of these pension plans that need to sell down stocks. So, we're essentially in a sideways market right now, and we're going to continue to see a ton of volatility. Now, if you watch the Financial Education channel, you'll probably have heard Jeremy refer to this as a kangaroo market because basically you see these massive jumps up and down. And I agree with him 100%. I think that's exactly where we're at right now. We're in this really weird kind of volatile part of this bull market. So here's what you need to keep in mind. Number one, there will continue to be volatility, right? So you need to be emotionally ready for it, and you should only invest your surplus cash. Now, why is that so important? Well, because if you need that cash at the end of the month to pay your rent or to do groceries, then if the market falls by 3 or 4 or 5% on a day like today, then you're going to be a seller, right? And we've seen many days like this. We saw this a few weeks back. We're going to continue to see this. This is kind of a normal part of a market. So I'm actually using this as an opportunity to buy more shares of super high quality companies that I like. Number two, the easy money was made in March and April, and now's a much more difficult time to make money. So don't go with speculative names. Stick to quality, stick to what you know, and you'll sleep better at night. Now, if you want some ideas for that, you should watch some of my videos. I did a top 10 stocks video, and I actually just posted a top 10 dividend stocks video earlier today. Number three, valuations are stretched. It's very tough to find good value right now. But keep in mind, the Fed is pumping liquidity into the markets like never before, and interest rates are basically at zero. So there's nowhere else to put your money. And frankly, there's still a ton of cash on the sidelines waiting to come back in the market, as we just went through at the beginning of this video. So that means just don't panic, stay invested, try to find relative values, make sure you have a long-term time horizon, and just overall lower your expectation of returns. And number four, this is super important. Steve Schwarzman, who's the founder and CEO of Blackstone, said on Monday that he expects a sharp V-shaped recovery this summer. Now, this is a really important signal because he has access to an incredible amount of information from the thousands of companies that Blackstone owns. Now, they see how their portfolio companies are doing on a monthly, weekly, and sometimes even daily basis. So they get incredible data and insight in real time. If you follow this channel, you'll know that I think Blackstone is the best investment firm, and I think Schwarzman is one of the best managers. So this to me is hugely bullish. So look, I'd love to hear from you guys. What are you thinking? What's going on? Are you guys nervous? If you are, comment below. I hope you guys enjoyed today's video and found it helpful. If you did, please make sure to like the video. Don't forget to subscribe to the channel if you haven't already, and make sure to click that notification bell. And as always, thanks for watching, stay safe, and have an awesome day.